You got me running, got me running. Take it, take it, take it, burn that. Raise your hands up. Raise them up.
Okay, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call, episode 280. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. So we had the FOMC statement and fund rate released earlier at 2 a.m. GMT +8 Singapore time just now. So let's get Kim Hong here, currency analyst at LCMS Traders, to give us his summary and views about that. Kim Hong.
All right, thank you, Junwei. So earlier today, the FOMC, as expected, held interest rate unchanged at the targeted range of 0 to 0.25%. Okay, they also held the bonds purchase program, okay, at least $120 billion each month. Okay, so what's different this time around is that the Federal Reserve actually acknowledged that the progress on vaccination program and the strong policy support have actually led to the strengthening of the economic activity and employment, and also the rising of inflation in the United States. Okay, now despite all these good things going on, okay, Chairman Powell actually highlighted that the recovery is still far from complete. Okay, and it will take quite a while before substantial further progress can be seen. All right. Putting a nail in the coffin, he actually reiterated that the recent rise in inflation is actually transitory and will not meet the standard for interest rate hike. Okay, so it's kind of like we're not going to do it this year. Okay, the most they may consider is probably cutting back on bonds buying. So yeah, that's it. We are not going to expect. We will not have to look forward to an interest rate cut this year. So that's all I have for now. Thank you.
Okay, thank you for that, Kim Hong. So let's have Scott Andrews from Forex Briefcase Australia to share his outlook on the dollar index. Scott.
All right, guys, and thanks for having me back on. And I think, Gim, you summed it up really well with your analysis that, we discussed uneventful was probably the key word. And, that's what it was. So Jerome Powell continued to do what he's been doing, and he just followed script essentially. I'm sharing my screen now with the US dollar here, currently trading at 90.53 or so. And look, it has broken through 91. So I talked about yesterday staying on the sidelines and waiting for the news. The news has obviously come out. The catalyst has pushed, the US dollar lower, as obviously continued asset purchasing is going to take place. And there was no real discussion about increasing the interest rate anytime sooner than expected, really. So it was very dovish, the language. And a trade idea potentially here, guys, would be I would wait for price to move a little higher. Around 90.80 is recent support. It broke through quite easily with the announcement when it was playing out early this morning. So I'll wait for it to come back up a little bit. It is sort of coming back up somewhat. It was 90.40 was the recent low. So I will be looking for it to come back up a little bit. If it shows exhaustion earlier than expected, if it's below 90.80, I might get in a tentative sell trade, but really I'd like to see it come back up a little and then sell from 90.80 and really targeting around 90.40 first of all, and then we'll just sort of go from there really with trailing that to 90 flat or so would be great to see.
Okay, thank you for that, Scott. So yeah, let's get into the currency in focus today, yen and gold. So today we are with Jin Dao Tai, founder of LCMS Traders, a multi-million-dollar trader, and he's also an international speaker where he speaks in countries like Hong Kong, UK, US, Australia, Malaysia, Vietnam, Indonesia, and of course here in Singapore, sharing his views about the FX market. Yep, so Jin, I'll pass the time to you for the currency call.
All right, good morning, everyone. So it has been a bit of a non-eventful FOMC, but also it sets the tone for what's going to be happening coming up into the short, medium, and possibly longer term future. You know, as Kim Hong and Scott has been talking about the FOMC, talking about, not likely to see any further rate increases at this point or for the foreseeable term. The inflation rate being close to 2 or at 2, but they're looking for it to remain above 2% for a longer time. You know, we're looking at the US, although they're looking a little bit dovish at this point, they look like they're preparing for what could happen coming up. The main reason why I'm looking through the statement here, and the main reason why they could look very dovish at this point is that the uncertainty of the economy based on the risk of the virus and risking to the economic outlook is there. Previously, when the FOMC came out and spoke, all they were talking about is, hey, it's at 2%, it's close to 2%. We're looking at further upside towards inflation, and then we could be achieving our goals. Right now, casting that doubt, casting that uncertainty back towards economic risk based on the virus. So with all that coming around, looking at the charts, the impact of this FOMC on the charts, as Scott was sharing, we've seen that massive inverted commas downside to the US dollar. Just looking at the Aussie itself, it's pretty much went towards that 7836 resistance. Right now it's coming back down, possibly some profit taking at this point. We spoke about this on Monday already, coming towards the target. On the New Zealand US dollar, talking about it, saying that it was going to break above 7241 or 7245 on Monday where we spoke, heading towards the 7293. Did that hit that resistance, and we see it coming back down again. So why I'm highlighting these two pairs is really to remind everyone that, as we approach key resistance areas or as we approach key levels on the charts or key price levels, you're going to see a bit more volatility. You're going to see profit taking, or even, as we said yesterday, some stop losses being hit, and then that big retracement back down again. So with all this news, with all this new uncertainties coming around, take a little bit more caution, keep your trades a bit more managed, right? So don't think that it's going to hit and keep breaking through. You want to take your profits, you want to reevaluate whether you're going to jump into a trade again or not. Looking at the euro dollar, we spoke about this on Tuesday, saying that it was going to test that 1.2053 support, did that exactly before going up towards a 1.2145 level. It's done that exactly. So it's a two-part trade. Things like this, you have to sit there, wait, and let it happen. So right now it's hit the 1.2145 resistance. Looking at some retracement, maybe with some further upside coming around if we do see that continual US dollar weakness being applied. The euro pound hasn't done too much because we've seen the pound dollar also testing a little bit lower before breaking above 1.3911 and possibly looking like it's going to head towards 1.4, but it's retracing a little bit back now again. All this retracement is possibly because of profit taking. We saw that big shoot up. We're going to see some profit taking at this point. So why am I looking at the euro dollar and also the pound dollar is because today we are looking at the yen pairs. We're looking at US yen, euro yen, and pound yen. So you need to have that as a basis to better understand what the euro yen and the pound yen is going to do. In terms of the US yen, we spoke about the FOMC. We're also going to be looking at some news coming out today on the US dollar, looking at the Forex Trading Asia economic calendar here. Today we have in the evening, where is it? Thursday evening, we have the US GDP being released quarter on quarter, expected to be 6.1 from a 4.3%. Again, possibly some good news coming from the US, but with that in mind, the FOMC has come out a little bit dovish. There is that risk towards the economy. Biden has just recently been speaking and he's possibly introducing that whole new tax, almost like a new tax regime, with more stimulus coming around. So I think that with this GDP number, even if it does come out at 6.1 or even 7% or even 8%, we're possibly not going to see that big US dollar strength come around. We're going to see some short-term US dollar strength with a good as would normally accompany a good news, but then the resumption back towards some US dollar weakness into the medium term. So I fully agree with what Scott is saying. We're possibly going to see the dollar index bounce back up into the short term, back towards the 90.80 level before maybe or most likely that resumption back down again. So keeping all that in mind, what this could actually translate to in the charts here on the US yen. We spoke about this on Monday night with the Traders Club members, saying that with the BOJ coming out with possibly some stimulus, they didn't say anything about that. And then with the now FOMC, the initial projection on Monday night was that it was going to break above this 108 level and head towards 109.80. It didn't do that. It didn't hit the 109.80. It came halfway. So since Monday night to now, you would have a good 70 pips. We saw that as an interim level as well. Before now, it's retracing back down. However, despite this retrace, I still do think we're going to see further upside on the US yen. But you're in the interim level right now. Look for that white candle to close further up, currently at 108.61. If it closes white, if it closes upwards, you could be looking again at further upside towards that 109.80 level. I would say be a little bit more conservative. Look for it to break above 108.75. You could be looking at a 30 pip stop loss for a good 100 pip or even a 90 pip take profit level. You're looking at a 1:3 risk reward ratio towards the upside on the US yen. The euro yen, on the other hand, as we spoke about this on last week, Thursday, we said that it was going to break upwards and close above 103.28. We're going to see it move up towards 131.71. Took a couple of days. On Friday, pretty much late Friday, it broke above 130.28. And for this whole week, it has steadily climbed up towards that 131.71 level. I hope you guys jumped onto that trade. If you didn't, with our view of how the euro dollar is moving, slight retracement back down, possibly going to track higher up again. I'm looking to see whether the euro yen is going to break stronger above that 131.71 level for further upside. At this point, it's possibly going to sit across for a while as we see some retracements being applied before that bounce up. What's a possible target on the euro yen? Looking further out as I look for a resistance. That one's very high away. Okay, so looking at that resistance, we could be looking, if it does break above 131, 131.71. 134 is going to be a massive high point. I wouldn't even target that much. I would say even 132 will be a good interim point. So look for it to close above 131.78. Okay, I'll zoom in a bit just so it's easier to see. You could be looking at 131.90, 30, 40 pip stop loss for a good 90 pip to 100 pip take profit level. Again, another 1:3 risk reward ratio towards the upside on the euro yen. Lucky last on the pound yen, we've seen that break out. Now breaking out of that 149 and 150 range. It's broken out of 150.82, tracked a lot higher, but it's being resisted now at 151.60. At this point, do nothing on the pound yen. I would not suggest doing anything despite the pound dollar heading higher. I would say let the pound yen track up, let it break above 152.26. At this point, it's very close. It's a good 60 pip away. Let it be patient. Let it break above 152.26 before looking for that next upside on the pound yen. The previous high 3 weeks ago was at 153. If you're going to be a bit patient, you have 152.40, a good 30 pip stop loss for again another 90 pip take profit level, another 1:3 risk reward ratio. And we can see it's almost like a pattern on the US yen, the euro yen, and the pound yen. All three downside 30 pips, upside 90 pips. Be careful, don't jump into all three trades because that would multiply your leverage or multiply your exposure by 3. Be selective, look at the underlying pair on which currency pair you're going to jump into. Then as we look into gold, the last time we spoke about it, saying that it was going to test 1773 before tracking higher. I still hold that same view. My view on gold is on the daily chart, so it's a bit longer term. It's tested, it tried to break lower, failed to break below that 1773. I still do think we're going to see that upside towards 1845. You could still be looking at about a 1954 stop for a good almost even 536 towards the upside. So possibly seeing a bit more of a trending situation happening or occurring across the board for all the yen pairs and also maybe all the other currency pairs as well.
All right, thank you, Jin, for the currency analysis on yen and gold. So, again, a disclaimer here, any information shared by the speakers is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Okay, right now, let's get Daniel in, trading coach at LCMS Traders, to share a little bit about the live trading session that happened yesterday with the Traders Club. Yep, so Daniel, do you have can you share what trades were in your watch list yesterday? What happened yesterday?
Yeah, sure, Junwei. Yeah, yesterday, we had a live trading sessions with the club members. We were showing how the club members to prepare, what to do, and how can we be looking for trades, for possible trades, right? So yesterday, really interesting. It was the evening, and we know the next day, which is this morning, 2 a.m. there was FOMC. Not much movement was expected, and indeed, no trades could be taken at last night itself at 8 o'clock all the way to 9 p.m. Now, so what we did here was that we reviewed for the live trading, we help members look at what to not to take a trade or force a trade. So we actually reviewed all the trades, look at it, no trades, and give out the reasons why you should not be taking a trade, thus avoiding the trade unnecessarily, where you could be taking an unnecessary trade and lose the money because it does not follow the high probability trades that we would like to have. Now, so what we did yesterday, we went through that, And then we also reviewed all the, when we reviewed all the currency pairs, we evaluated, it came out actually 2 trade ideas for the medium term or the long term trades. You know, that means for the week itself. What kind of trades did we share? Okay, the first one that we shared was Aussie yen. Aussie yen, we will look at it, and you know, we actually, why we all look at Aussie yen is because we wanted to avoid the US trade pairs, because we want to evaluate that only after FOMC news coming in, taking into account what power is going to speak of and which direction it goes before we further evaluate. So we evaluate those non-US pairs, and Aussie yen, we look at this trade, and it has been resisted really very strongly at 84.56, and we look at it, since it's strongly resisted, we were looking for a bounce back down here with a sell bias of a stop at 84.1 with a stop loss of 30 pips here and a take profit about 60 to 80 pips. You know, more really about 1:3 risk reward ratio. But however, if it does indeed break above the resistance zones, we will say that, hey, let's look at it. We will buy only at 85. When we buy at 85.0, what we could be looking for here is possible, 50 pips of stop loss, and take almost quite close to 100 pips of take profit to the next resistance zones. However, based on evaluation, we have a more stronger sell bias here at 84.1, stop loss 30 pips, take profit 80 pips. Okay, so now you can see it has run since last night. It has still been resisted at 84.6 and seems to be coming back down. We'll see how this goes. Now for Euro Yen, I'm very happy that the analysis is really following what Jean has just mentioned based on the analysis, right? So we were looking at the trend, and look at this 4-hour chart. You know, it has been resisted and it has a very nice upward trend. We'll be looking for a break above 131.8. Now we were saying that if we're following the trend, and moving upwards based on the breaking through the resistance based on last night, if it did break through a resistance, and it did in the morning, and it breaks, if it touched at 131.8, now we will probably be waiting for this candle here on the 4-hour chart, or you can look at the 1-hour chart, break really very nice strong bullish candle. We will probably be taking a buy trade idea at about stop loss 40 pips here and a take profit of 80 pips. Right, so about 80 pips there. This is what kind of trade idea we look at. So, sometimes when we do look at a trade, we don't have to immediately take a trade. If there is no trade to be taken, don't force a trade and take unnecessary trades. You could be preparing for the week ahead and a planning preparation, so that when the plan do activate, you can take a high probability trades and be profitable. Jinwei.
Thank you so much, Daniel, for sharing the trade ideas you had yesterday with the Traders Club members. So, yeah, again, guys, that is not a trade recommendation. It's just the opinion and views of the speaker. So do your own analysis prior to entering any trades. Okay, we have come to the end of the session. I've pasted up the link for the Traders Club. If you like to join our weekly webinar session, just head over to the link and join now. Yeah, so we have come to the end of the session. We will see you guys tomorrow for the Canadian dollar analysis. Thank you and goodbye.